That's right.
If you want, I can ask the questions he had for you.
Sure.
Yeah, I actually have his question script right here, so I could just read his questions to you. So you want to just go back and forth, you first, then me?
I'm looking at your questions. I
you
think
had
maybe
five.
let me ask you your first 3 questions, and then you can ask me my 4. Let's just we'll do a split panel. How about?
All right, and we'll skip the 5th question,
or we'll get to it at the end.
Okay.
Or I'll ask you yours, and then you ask me my 4, and then we'll see how much time we have.
Okay.
All right. Well, hi, everyone, and thank you for joining us. We apologize for the delay. Ron Delege is supposed to be the moderator of today's session, but I think something has come up. We haven't been able to get a hold of him. But Matt Hogan and David Cryptocurrencies are here and eager to talk to you guys about cryptocurrencies. Matt agreed to kind of take over the hosting duties and ask the questions. So thank you very much, sir, for filling in. He's the Chief Investment Officer of Bitwise Asset Management, and David Cryptocurrencies is the Chief Investment Officer of ETF Portfolio Management. Gentlemen, thank you very much for being here. The floor is yours.
Amazing. And thanks everyone for coming to this session. We're going to talk a lot about crypto today. Dave and I are going to take turns pretending to be Ron. Ron helpfully provided all the questions that he was going to ask each of us. So we're going to begin. I'm going to ask Dave a bunch of questions about his views about crypto. Then we'll pause and he'll ask questions of me, and we'll both learn something in return. Maybe, Dave, you want to start off just by telling us a little bit about ETF PM, and then we can talk about your views on crypto and how they fit in there.
Sure. Well, thank you, Matt, and thanks to the MoneyShow for having us. ETF Portfolio Management specializes in trend following and absolute return strategies, in addition to strategic indexing through the investable benchmarks. So you can find us online at investablebenchmarks.com and etfpm.com.
Amazing. And when did you first get involved and started thinking about crypto? And then I'll dig into Ron's questions.
Well, I would certainly notice crypto in the first wave back in 2017 when we saw that amazing bull market. And after 2018, we certainly needed to give it a timeout. But after it heated up last year and in the middle of last year, the sign was on to get back into crypto. That's
amazing. We just got Ron in. Hey, Ron, how's it going?
I'm doing good. Thank you, Matt. Sorry for the...
Oh, now we lost. Well, there you are. Well, Ron, what we're going to do, I'm going to ask the first question you had for Dave. He's going to answer it with eloquence and clarity. And then I'm going to let you resume duties as moderator, and we'll go from there. We haven't covered any of your questions. But Dave, Ron's first question was, when you look at the cryptocurrency landscape, there are 8,000 crypto assets out there. You're building portfolios. Why are you focused on Bitcoin and Ethereum as the most important assets for investors to think about, potentially own, add to portfolios today?
Sure. Well, let's remember Bitcoin hit a 1 trillion market cap in 12 years. It took Google 21 years. Facebook just got there in 17 years. So Bitcoin shattered the world speed record to a 1 trillion market cap. And over the past 6 years, the Bitcoin Trust delivered 66 times your money, 52 times the S&P return, and almost double NVIDIA. So as trend following specialists, those are trends that we like. And given this historic long-term return, cryptocurrency has become a critical new asset class for all investors.
Yeah, that's those are some pretty amazing numbers, Dave. Let me ask you this. You've talked about it a lot. We've chatted many times, and you've always said that having the right balance of cryptocurrencies inside a portfolio is key. Can you elaborate?
Position size is critical with hyper-aggressive growth assets. Given the extreme volatility in cryptocurrencies, conservative passive investors could start very small, allocating 0.5% to 1% in a combination of Bitcoin and Ethereum. Moderate to aggressive growth investors could allocate 2 to 6%, But the biggest lesson from crypto is that just a small 1% allocation can make a very big difference long term. And it's amazing to see Ethereum growing faster than Bitcoin. Over the past 18 months, the Ethereum Trust, ETHE, gave you 7 times your money, which was more than double the Bitcoin Trust.
Yeah, pretty amazing. Now, Matt, I want to shift to you because what you guys are up to at Bitwise, I think is quite innovative and noteworthy. And, you know, you have this trust, the Bitwise 10 Crypto Index Fund, BitW, which I think happens to be one of the most innovative products in the crypto marketplace. And we've talked about it before. And it feels and almost seems to me like, you know, taking me back to the 70s when the S&P 500 index fund was first launched by Vanguard. It's got that sort of vibe to it. Tell us more.
Yeah, that's exactly right. Well, you know, as you know, Ron, I'm a huge index fan. Jack Bogle is a hero of mine, so that analogy brings me great joy. The idea behind the Bitwise 10 Crypto Index Fund is that, like any disruptive market, it's relatively easy to be bullish on crypto, Bitcoin, and blockchain in general, right? If you think of it as a new way for money to move across the internet, if you think that you can move $1 billion and have it settle in 10 minutes, if you think you can build a new automated financial architecture on Ethereum that's vastly more efficient than traditional markets, that's very exciting. And long-term, that'll have a huge impact on the market. But there are 8,000 cryptocurrencies out there. It's hard to pick and choose which ones will win. It's hard for retail investors who may, as Dave said, have 1% of their portfolio to keep up with the news on this asset, that asset, and the newest asset. The idea behind the index fund is let's just get beta exposure to what's happening in crypto. Let's buy an exposure that we can own, that we know is professionally managed, that we know screens out risk, that rebalances regularly, so that we can maintain exposure to the top performing crypto assets without having to monitor this on a 24/7 basis. So we are happy it's the first crypto index fund. It's been around since 2017. It's now the largest crypto index fund in the world. And it's the core of my crypto portfolio on a personal basis as well.
Excellent. Back to you, Dave. You know, aside from investing in crypto-linked trusts, are there any other ways that you're getting your crypto exposure for clients with the portfolios that you're building?
Sure. Well, in addition to both passive and active exposure to the Bitcoin and Ethereum trusts, we've traded Matt's Bitwise Index BITW, and we've also traded the blockchain ETF BLOK. But our exposure can change very quickly through our risk control efforts.
Excellent. Matt, you know, Bitcoin is in the news every single day. I don't know if I'm getting, what's that called when you get like a fatigue, Bitcoin fatigue maybe, because it's in the news every day. Definitely. I mean, I guess that's good and bad, I guess, you know. But, and we know that it's still in the crypto marketplace top dog by market cap, still pales in size compared to, you know, like gold. So there's a lot of catching up to do in terms of market cap. And so my question, I guess, deals with, you know, the utility of the crypto itself, the coin. You know, technology is quickly evolving and it's transforming entire industries. So does Bitcoin eventually get dethroned? And if so, I guess the question that the viewers and participants would want to know, well, you know, who looks like it's going to be that dethrones Bitcoin's dominance?
It's a great question. You know, the way I like to answer this is people often think about crypto as cryptocurrencies. And so in their mind, they're thinking about Bitcoin and Ethereum like you might think about the dollar and the yen. And in that world, it's difficult to imagine why you would have more than one, right? If it's a global internet currency, it should just be one, right? We shouldn't have Bitcoin and Ethereum. That's actually not the right framing. A better way to think of it is to think of it like software companies. Think of it like Microsoft and Salesforce, both software companies, but optimized to do different things and going after different markets. What do I mean by that? The Bitcoin blockchain on which Bitcoin is stored is a software program. It's literally built out of code. As a software program, you can't do much with it. It is like, it's the OG of crypto. And when they built it, all you could do with it is program it to send and receive money or store money. And that's pretty cool. You can move $1 billion to, to Thailand and have it settle in 10 minutes. Fastest monetary system in the world. That's awesome. Ethereum was developed second. It's the second largest crypto asset. It looked at Bitcoin and said, it's cool that you can send and receive money, but what if you could program this to do anything? What if you could program it to be the internet rails for a new financial system? Program it to do automated loans, automated IPO raising, automated exchanges, automated trust agreements. Now you might think, Matt, that means Ethereum will win in the long term, be bigger than Bitcoin, because being able to do everything is better than being able to do a few things. But in software, that's not quite true. Being able to do a few things makes your software database more secure. If you think about it this way, when Bitcoin was launched, it was 400 lines of code. It was very unlikely that there was a bug there because you could read it in a few minutes. Ethereum was millions of lines of code, more functional, but less secure, more likely to have a bug. It evolves more quickly. I raise that because Bitcoin is now going after a different market. It's going after the digital gold market. And in the digital gold market, all you want to do is have it sit there like a pet rock and be secure. And its software is actually great at that. Ethereum's going after a bigger, more exciting market, which is this new internet of finance, or this new rails for the new monetary system. I think that's a larger addressable market, but it's earlier on and there's more risk as to whether it will get there. So I think Bitcoin is in the future, a less volatile risk on a large market, and Ethereum is a more volatile risk on a very large market. And it's an active debate. Dave and I were having it about, will Ethereum dethrone Bitcoin? Beyond those two, there are other crypto assets that are like startup software companies that are trying to be better than Microsoft and Salesforce by being new and hip and whatever. And you can ask, will those dethrone it as well? I think that's going to be difficult.
Yeah, I like that analogy, the digital gold analogy. And really, when you think about the origins of Bitcoin, I mean, that was really the initial thesis, was to give an alternative system to, the traditional fiat currencies, and of course, some of the concerns with the mounting U.S. debt and how that interacts with fiat currency. And I love the OG of crypto. I'm going to use that. Great analogy too on software.
Ron, it's hard for Matt to pick which crypto children is his favorite, but I can tell you at ETFPM, we do expect to see Ether surpass Bitcoin. Mm-hmm. Ether has a better performance trend, leadership in smart contracts and NFTs, and perhaps most importantly, a better capacity to adapt. So Matt and I were talking about an over-under time frame when that flipping can happen. So I'll take the under on 5 years. I don't know if Matt wants the over.
To make it fun, sure. But I think the argument that Dave is making is a good one. I think it's an interesting, and of course, as an index-based strategy, we just let the market set it. But it's there's a lot of real thought behind what Dave just said.
Yeah. Dave, do you have any questions for Matt? I know we had talked before. Is there anything that you wanted to ask him? Because if not, I've got a few more questions.
Sure. So Matt, really interested to hear your thoughts on the metaverse worlds, Decentraland, and potential new products for Bitwise.
Yeah, absolutely. So if you want to think about crypto to date, you have Bitcoin as digital gold, you have Ether as this new rail of the financial ecosystem. You have DeFi apps like Uniswap that are, Uniswap's a decentralized version of Coinbase. There are other sort of next big things, right? One thing that you mentioned, Decentraland, is an example of a digital realm where you can buy digital real estate. To a bunch of people in the audience, that will sound goofy, but often new next generation technology trends sound goofy before they become part of reality. And I think it's highly likely that people live more and more in a digital presence. And there are a bunch of people paying real money for these highly coveted parts of Decentraland. Another example is sort of Web 3.0. Web 3.0 is an idea of a new version of the internet where you control your data and your privacy and can move around between apps easier than you can in our current system, where your relationships are housed at Facebook and are portable to other social networks. I think that's an area that's going to develop in the future. If you look at Bitwise and you want a model for what we're going for, look at a company like BlackRock. I'm not saying we're like BlackRock, but BlackRock provides ETFs that gives you tools to access multiple different sectors and themes of the capital markets, whether it's stocks or bonds or commodities. Bitwise is looking to provide tools that let you access multiple different sectors of the crypto economy. That can include NFT infrastructure in the future. It could include Web 3.0. It could include many other things, but those are all in the framework of things we might consider in the future. We did launch one sector fund. It's a DeFi or decentralized finance sector fund, which we launched in February as a private fund, and that's an example of the direction we might go.
Thanks. And just one follow-up. I know Ron's going to touch on it, but when we eventually see crypto ETFs in the US and these trusts begin to transition, what can we expect in that transition process, timing, price impact, et cetera?
Yeah, so the first thing I would say, there are lots of people working on crypto ETFs. What they're specifically working on is a Bitcoin ETF. The SEC is going to crawl, walk, run when it comes to crypto, and that means they're going to start with Bitcoin. It's got the most established regulatory structure, et cetera. So it's going to be
in Canada is just run.
They've always been ahead of us on the ETF front. Fun little fact, not widely known. The first ETF launched in Canada in 1991. It then shut down, which is why SPY gets to claim it's the oldest ETF. Not the first, as nearly every Canadian financial professional will remind you if you tell them.
ETF trivia.
Yeah, exactly. props to Canada, man.
Hey, man, they're always ahead. Yeah, so it'll be a Bitcoin ETF. There's an app. I know that I don't want to speak for Grayscale, but I know they've talked about converting GBTC, the Bitcoin Trust, to an ETF at some point in the future. If they can find that pathway through, which I hope they could, but I don't know that they can, you would expect premiums and discounts to go away and for it to trade closer to NAV. But there's a fair amount of regulatory risk in that process, and I don't know what to expect. In terms of what it will impact on other trusts, I don't know that it will have a huge impact because Ethereum is going after a very different market than Bitcoin, and I think will have increasingly divergent performance characteristics. And I don't know that investors will think of a Bitcoin ETF and an Ethereum trust as fungible. But of course, it's hard to predict future market trends, and those products can trade to very high premiums and very low discounts, and investors should be aware of that. But I think eventually down the road we'll get more crypto ETFs outside of Bitcoin, but it's going to start Bitcoin only.
And my question that, just adding to what Dave was asking, even if you do have a true ETF structure with cryptos, explain to us how they're going to deal with the after hours trading, because as we all know, cryptos are 24/7, and exchange traded products linked to crypto will just be available for trading during stock exchange hours. So there's a lot of time when, cryptos are trading 24/7 and then the exchange traded ETFs are not. How is that going to be dealt with?
Yeah, I didn't think of nights and weekends when I signed up to the CI
right.
Asset Manager. There's a reason they're not moving that 4:00 close in New York. That's a nice way to get out of town. It's a great question, Ron. From one perspective, it's a simple answer. It'll be like gold, right? Gold trades 24/7 basically in New York on the LBMA. The ETF only trades through Friday. And you often see the price change relatively significantly between the Friday close and the Monday open. And so you'll see that same sort of characteristic. It does change it from a sort of an ownership perspective, right? Because crypto investors who allocate through an ETF won't be able to exit or enter at a price occurring on the weekends or overnight, which you could do through direct holdings. The thing about owning crypto, and this is true today in a lot of ways, and it's going to be true after an ETF, is that every way you can approach it has its own pros and cons. You can own it directly through a self-hosted wallet and take on custody risk and have to be a computer science expert. Eventually, you'll be able to buy it with an ETF. I hope, through your Schwab account. That'll be super easy, but you won't be able to trade it at night. You could buy it through your phone, but if someone SIM hacks your phone, you lose it. You're just making trade-offs. And the important thing is for investors to be aware that each structure and approach has its pros and cons. In the same way that buying single stocks has pros and cons, buying an ETF has pros and a few cons, buying a mutual fund has definite pros and cons. You just have to evaluate the various risks and make the right choice for you.
Yeah, great points. Do we want to open it up to the audience? Because we have another couple of minutes, and I'd like to take some questions from the audience. Do we have any questions? You want to post that in the chat box so I can read that off?
Yeah, I'll go ahead and post those. If you have another question you wanted to use in the meantime.
Okay, yeah, that's perfect. Let's see. So we covered.
Ron, I was going to mention,
Yeah, go ahead.
We were talking about financial advisors being concerned about getting involved with crypto. And I would just say that financial advisors should be excited about cryptocurrency because the volatility is justified. Given the historic returns and countless uses for Ethereum, advisors should see that having crypto exposure means participating in the best technology bull market of all time. And a very small allocation can make a huge difference long term.
Yeah, no, that's a great point. I think there's lots of debates in the industry. I think the industry as a whole is coming to that realization that they're embracing the fact that cryptocurrencies are a major asset. Well, they're becoming a major and established asset class. They're still in the process of maturation, but they're going to get there. They're going to get there. I mean, the growth numbers don't lie, and
I would add to what Dave said, Ron. The other thing advisors should realize is their clients are already allocating.
Yeah.
Coinbase has more accounts than Schwab, TD Ameritrade, E-Trade combined. And if advisors ask their clients, they're allocating on their own, they're not managing it correctly. The biggest risk that Dave is controlling for, I would argue, there are lots of benefits to his strategy, but one is that it forestalls behavioral risk, which is a huge risk in crypto. This is a volatile asset with huge news flow. It's very easy to panic at the bottom and sell out at exactly the wrong time. Advisors can help their clients by asking them if they own crypto, and if they do, bringing it into the portfolio mix and managing it professionally. It's the single best way that they can help their clients succeed in this space.
Got a couple of questions here. Why has BitW fallen so sharply this year, down from the 80s to the 30s?
Yeah, I would recommend that the thing I would say about BitW specifically is those products can trade at premiums or discounts, and those premiums can be volatile, and that they're not, and they're important to understand. So we have a research piece on our resources page that talks about those premiums and discounts. And that's probably the closest I can get to addressing it.
Give us that URL again, Matt.
Sure.
So that
it's bitwiseinvestments.com.
Bitwiseinvestments.com. Yeah.
I would just add to all investors who are looking at the price discounts in some of these instruments, the mindset for exposure to crypto needs to be long-term. The short-term volatility is insane to try to make that the agenda. So when you look at the long-term focus of participation in crypto, the index products give the investor very efficient exposure to more than one currency, but investors really shouldn't be too obsessed, and they should look at the sell-off this summer as a tremendous buying opportunity.
What are your thoughts on OBTC? OBTC, what is that? I'm not familiar with that ticker. Are you guys?
OBTC is a Bitcoin trust from Osprey Funds.
Oh, Osprey. Okay.
And it's another choice that investors have in the market.
Yeah, that's a newer one. Any thoughts on altcoins?
I'll let Dave take that. I answered the last one.
Dave, any thoughts on altcoins?
Come
on, you got to give us an opinion.
Yeah, aside from our focus on Ethereum, Ethereum and Bitcoin are the two crypto assets that we focus on for our clients. So that's as deep as we go in the crypto space for now.
Got it. I wanted to ask you, Matt, we've seen this influx of tokens, the tokenization of assets, tokens versus coins. Can you maybe explain to our audience the difference between each?
Well, there are a wide variety of crypto assets. If I wanted to classify them into a handful of groups, there's Bitcoin going after the digital gold market. There's Ethereum and other Ethereum competitors that are creating this internet of finance. There are assets like Uniswap or Aave, which are specific apps. So Uniswap only does one thing. It's a decentralized exchange. Ethereum can be powered to do anything. You could think of Ethereum as the app store and Uniswap as an app that sits on the app store. That's not a terrible mental model. And then there are a huge amount of cryptocurrencies that don't do much of anything at all. Tokens, you can tokenize any asset. You can tokenize a stock, you can tokenize an apartment. It's just a way of creating a digital representation of a real world value such that it can move on this new and more efficient financial rails. And that's a very exciting future application of crypto, but it's super early for where we are right now.
It's a derivative.
Yes, that's one way of one. I don't know if the regulators would consider it a derivative, so I don't want to speak with them. But that's one way of thinking it. It's a digital representation of a real world asset.
Right. And some of these offshore exchanges are already tokenizing, like you said, various assets. Any thoughts? Let's see. Could you discuss the likelihood of government regulation in the crypto space? Wow, there's a big one. Either one of you want to take that?
The likelihood of it is 100%. Yeah, it's already significantly regulated, and regulators are increasingly focused on it as it becomes more mainstream. What investors should understand and how to evaluate future regulatory developments is if those regulatory developments put crypto on par with the traditional fiat system. In other words, if they apply the same AML KYC rules, if they apply the same sort of money transfer rules, if they regulate crypto exchanges like they regulate national security exchanges, crypto will ultimately win because it's a faster, more efficient way to move money around the world. If regulators overreact and put crypto at a discount or a disadvantage to traditional fiat systems, if they apply rules that aren't applied to the traditional systems, then that could challenge crypto's long-term growth. And so there's going to be a lot of regulatory headlines in the next few years. My gut says that those regulations are going to be a primary driver of the next bull market in crypto because clearer regulations will allow institutions to come into the market. But regulations are made by people. People are flawed, and there's definitely a non-zero risk that people will overreact. That's my view.
And the regulatory concerns and the big sell-offs are ultimately just long-term buying opportunities. The proof of the utility of these technologies are well proven.
One other question here about BitW. Well, actually, this is related to Bitwise, the lineup of trusts. Can we invest in, I guess I don't understand this question. Can we invest in any of the trusts in Bitwise except through an advisor? I'm not sure I'm understanding that question. Matt,
I can understand it.
Yeah.
Bitwise is focused on serving the financial advisor market.
Okay.
But all accredited investors can open accounts with Bitwise for our private funds. And then, as mentioned, there are OTC traded trusts, which are available, or one OTC traded trust, which is available through a ticker symbol. And that comes with premiums and discounts. So you absolutely can, if you're an accredited investor, you can go to bitwiseinvestments.com and find out more. But we do focus our business on serving that advisor market.
Very good. Thoughts on Riot as a blockchain play? RIOT. It's an individual security, I believe.
Yep. I have thoughts unless you do, Dave.
Not a security that we've been trading, so all yours.
Riot's a North American miner. North American miners are in a relatively advantageous moment right now because China has shut down Bitcoin mining, and the difficulty the amount of mining power around the world has fallen recently, putting US miners that didn't have to shut down at a significant advantage. It seems to be an interesting, well-managed, well-positioned company for the particular moment. But I'm not an expert. That's not investment advice. I would classify it in your mind as a North American Bitcoin mining company, a pure play on Bitcoin mining activity. in the U.S. and exposed to the risks there. And its primary mining facilities are in New York and Texas, so relatively well-regulated venues.
Very good. Well, I think we're going to have to leave it there. We're a little over time, and hopefully everyone has enjoyed this outstanding discussion of cryptocurrency investing. And thanks again to Matt at Bitwise and Dave at ETF Portfolio Management. Thank you so much for the insights. And thank you to all of our audience for tuning in and to the Money Show for hosting us.
Thanks, everyone.
Thanks,
Take care.
everyone.
We'll see you next time.